So Hillary Clinton is trying to run a progressive campaign where she's going to be tough on Wall Street, guys. She's going to be tough. She's going to take on the banks. She's going to win. Well, that's interesting because I've said on my show before, and I've covered this topic, that she's actually been the recipient of money from Wall Street, from the financial industry. Okay, well, how much? Well, according to the Associated Press, the Clintons, which includes Bill, have collected a whopping $35 million from the financial industry since 2001. And some of that wasn't just from campaign contributions. A lot of that comes from personal income. Now, the AP reports that in the 18 months prior to her announcing her second campaign for president, Hillary Clinton had addressed private equity investors in California and New York and delivered remarks to bankers in Hilton Head, South Carolina, and spoke to brokers at the Ritz-Carlton in Naples, Florida. Now, these are just part of her speeches that she'd given just in the last 18 months before she ran for election. Interesting. So even up to just before, about a year and a half before she started running for president, she was still speaking to Wall Street. She was still speaking to equity investors. Now, her efforts were just part of a 15-year period in which Clinton and her husband, former President Bill Clinton, made at least $35 million by giving a total of 164 speeches to different financial services, real estate, and insurance companies after leaving the White House in 2001. Now, all this information is freely available. You can find it from public disclosure forums and records released by her campaign. And the Associated Press, what they did is they found this and they analyzed all this stuff and they posted it in this article. Now, what does all this matter? You're probably wondering that, right? Okay. Well, it matters because, as I've reported before, money in politics is an incredibly important issue. Not just because of this election, but because of the system in general. The system that we set up is deeply corrupt and deeply flawed. And why? It's because money leads to access to politicians. It leads to influence. It leads to a system where you get backed by a billionaire or several millionaires, and you get into office, they expect something in return. And normally they get it in the form of tax breaks and special giveaways written into the tax code. And, contracts even. So that's a problem. That's a huge problem. Now, Bernie Sanders and Martin O'Malley have made the same case about Hillary Clinton getting all this money from Wall Street. You remember some of the best debate moments from the last presidential debate, which, by the way, was on a Saturday, so almost no one saw it. About 8 million people saw that debate, where Hillary Clinton was getting hammered on her ties to Wall Street. It's funny how not a lot of people got to see that. Anyway, they made the case that Clinton can't be trusted to honor her progressive promises from her policies once she gets into office. That she'll do a sort of a bait and switch. Like, oh, you thought I was going to be tough on the banks? Yeah, not so much. That's kind of the thing that we're hoping against, right? We want someone to be tough on the banks. But then again, we don't trust somebody to be tough on the banks if they're getting paid by the banks. And that's the problem. Now, interestingly enough, her financial backers in the finance industry said that they have little expectation that her family's personal profits will influence her policymaking, noting their own opposition to her plan to raise taxes on hedge fund and private equity gains known as carried interest. So we're giving you all this money even though we oppose your plans to raise taxes on carried interest loopholes. Well, we don't like that, but we're still giving you millions and millions of dollars for your campaign. Now, I gotta ask, why would you give her money then? I don't think that industry donors just give millions of dollars to a campaign because they believe in that candidate. They're ready for Hillary, by goodness. Yes, they're so ready for Hillary, I'm going to give you $1 million, even though you're going to go against my own financial interests. Well, that doesn't seem right. And look, maybe there are some progressives on Wall Street that are like, hey, you know what? I like Hillary's policies. I work on Wall Street, but it doesn't mean I don't like Hillary's policies. Okay, that's fair. That's fair. That's fair. And not everybody that works on Wall Street's a bad guy. I'm not saying that. I'm saying as an institution, it is corrupt. Like any big institution can get when you have too much power and too much money and too much voice in the government. And that's exactly what's happened to Wall Street. And corporations are amoral machines whose only purpose is to make money for their shareholders. That's the whole point of a corporation. So when a corporation or a wealthy individual or a hedge fund manager donates to a campaign, you normally do that in order to use the legal laws. It is legal to bribe a politician using campaign donations, and legal to get some in order to get something back, in the form of a tax cut for the entire industry. That's legal. That is our system of legalized bribery in action. So there you go. And here's the thing. Wall Street's part of the economy, right? It's an important part. Bankers are important. I'm not going after the bankers as a whole. Like, I'll get rid of all private banking. No, that's ridiculous. And neither is Bernie Sanders. Neither is Martin O'Malley. What they want to do is rein in the excess. And that's what I want to do. So if you're a progressive and you believe in reining in the excess of big banks, why would you support Hillary Clinton instead of the more progressive Bernie Sanders? Unless there's some sort of financial incentive, right? And look, even if you're not a progressive donor on Wall Street, Hillary Clinton has claimed that her plan to regulate Wall Street, well, she claims that it's stronger than Senator Sanders. So if you're a not progressive working on Wall Street, and she's got the stronger plan, why would you still support her by giving her millions of dollars of campaign contributions? Do you see where this is starting to break down? The whole logic here is starting to come apart. Well, there's more. You see, as a business, if you're a business, wouldn't it make sense to support someone who's going to help your bottom line, who's going to help your profits by lowering your taxes and deregulating your industry? It makes sense, right? By opposing something called GlassSteagall, which Clinton argues against, right? Now, she argues against it because she thinks it's not strong enough. Well, it's not going to do anything. So why bring it back? Well, GlassSteagall would stop banks from using depositor money to gamble with. Why leave it out? Okay, if it's not strong enough on its own, which I agree with, okay, but there's no reason to kick it out. Include it. You should include it in any Wall Street reform plan. There's no reason that a bank should be able to play with depositor money and then profit off it. And if they lose, the depositor also loses. That's not right. That's not progressive. Why should we not include a new version of GlassSteagall? Why fight so hard against it? Especially if your plan is the stronger, more progressive plan. It makes no sense. It makes no sense. As I mentioned before, industry backers keep saying that her personal profits from the speaking fees, from speaking at Goldman Sachs and Citigroup, well, it won't impact her policies. Now, here's an example of one such backer named Alan Patrikoff. Now, Mr. Patrikoff is a venture capitalist and a longtime Clinton fundraiser. And he said this: she and Bill were both government servants all their life, and there was a set period of time where they could make money. He's, of course, referencing those paid speeches to Goldman Sachs. And of that, he said, she had to maximize her earning potential. That sounds pretty Wall Street, right? But hey, look, You got to make money, right? I understand. I get it. And to be fair, she also gave a lot of unpaid speeches to different charities. And speaking of charity, she did donate some of that money from her speaking fees to different charities. To her foundation, the Clinton Foundation, which does help people out. So I'm trying not to be unfair to Clinton. I'm just trying to get the facts out here, okay? So the Clinton campaign also pointed to her record, saying that she has a history of working to regulate the industry. Now, there were negative ads run by a group called Future 45, which is a super PAC backed by six-figure checks from hedge fund managers, and that demonstrate that Wall Street expects her to follow through with her regulations. Now, this is according to AIDS. Any honest look at Hillary Clinton's record shows how she spoke out early and often against Wall Street's excesses in the run-up to the financial crisis. And this is according to campaign spokesman Brian Fallon. It's clear they believe she will take action as president to crack down on the industry's abuses. Okay, so I guess according to the industry wants to be regulated so badly. And Hillary Clinton just happens to be so incredibly tough on the banks when she told them, to cut it out in 2007, that they're rushing to support her with their millions of dollars in cash. Now let me remind you guys what happened after she told the banks to cut it out in 2007. Now she goes out to the banks and says, hey, you guys over there on Wall Street, you better cut it out. You better stop that right now. What happened? Oh, right. Nothing. They continued doing the same old thing until they crashed the economy in 2008. Oh, that was real tough. Real tough. Something just doesn't sound right here. Doesn't smell right. Doesn't pass the smell test. What industry gives millions of dollars in campaign contributions to someone that they admit will hurt their bottom line? Doesn't make any sense. There's literally no example of an industry that says, yes, regulate me more, tax me higher so I can make less money. It's inconceivable. It's beyond the realm of logic. And it's completely uncharacteristic of the industry at large. Remember, most of their money goes to people who oppose regulation. Things like Dodd-Frank, which were incredibly weak and watered down to begin with, and Republicans that are paid for by these industry lobbyists continue to chip away at it day after day. They've been chipping at it, away at it for years. They hate Dodd-Frank. They hate regulation. They hate rules. And this whole thing about Hillary Clinton being so tough in the banks, and that the banks expect her to be absolutely tough, and yet they're still pouring millions of dollars into her campaign. I don't buy it. I'm not buying it. And there's more. Now, according to the public disclosure forms and records, the bulk of the Clintons' paid speeches to the financial industry actually came after the 2008 economic crash. So essentially, after she told them to cut it out, and then they crashed the economy anyway. But hey, that's where her money came from. The bulk, the majority, is after she said that, and they did it anyway. And you know what happened afterwards? She bailed them out. She voted to help bail them out. Oh, come on, man. And from 2009 to 2014, the couple made $26 million from 109 appearances sponsored by banks, insurance companies, hedge funds, private equity firms, and real estate businesses. And at those industries' conferences and before their trade organizations. The lion's share of that money came after the crash, after she bailed them out, which was a boon to the financial industry and a boondoggle for the taxpayer, for you guys. But hey, look, let's be fair. Hillary Clinton did serve as Secretary of State for most of that period. And Bill Clinton brought in a majority of that money. He brought in about $17 million. Now, that included $250,000 that Bill Clinton earned for mingling with investment managers in New York on May 12th. That's 30 days after she released a video announcing her second bid for the White House. Now, as I said, I reported earlier, over the course of her career, people working in the finance and real estate industries have given her campaign about $35 million. Now, that's more than any donors from any other lines of work. And this is according to data from the Center for Responsive Politics. Now, her two top contributors over those years were employees from Citigroup and Goldman Sachs. And the Clinton Foundation has also collected millions of dollars from the industry, with companies such as Barclays, Citigroup, Fidelity, HSBC, and Goldman Sachs listed as donating as much as $5 million apiece. You don't think that will buy you a little bit of influence? They wouldn't do it if it didn't do something. Or maybe it's just a giant tax write-off. Who knows? But continuing. So on the topic of her proposed regulation, some of it is detailed here, what she said she was going to do. Now, she said she would actually tax high-frequency trading, which is a great idea. Fully in support. She's also vowed tougher criminal penalties for individuals who break rules. Now, she also says she would raise taxes on the rich, including closing the so-called carry interest loophole that allows Wall Street profits to be taxed at a lower rate. All those are pretty good policies. I'm in support of those policies, and I'd love to see them implemented. But as proposals go, they are a good start. But there's still nothing that stops depositor money from being gambled away by Wall Street firms, aka GlassSteagall, which is what we need. There's nothing about financial speculation, and there's nothing in there that I could see that would prevent another Wall Street financial crash. Nothing. So there's that. Now, as a side note, the financial industry has already factored in fines as just a normal cost of business. These fines are a slap in the wrist. They hardly affect the bottom lines of a business. Now, you see fines of billions of dollars in fines, right? Being levied against financial giants like Citigroup and HSBC. And like, oh man, billions of dollars worth of fines. That's just the cost of doing business. And when you're raking in billions of dollars doing the wrong thing, and very, very little goes to paying those fines off, well, you've made a profit doing the wrong thing. That's going to encourage you to keep doing the wrong thing if you're making so much money on it. Remember, corporations have no morals. They will do whatever it takes to get a good return on investment. And that's what it is. And see, that's why these proposals that she has put forward, they don't worry her backers on Wall Street. Remember, the banks are big. The banks are powerful. And there's nothing in there that deters any sort of bad behavior. Nothing. I guess maybe the threat of jail. But they could be like Obama, and we only look forward instead of backwards. We've seen this before. Anyway, so even with these proposed rules, the financial backers from Wall Street, from the industry say, yeah, but you know what? We're not worried. You know why? Because we'd still be very, very profitable. Even with some of those higher taxes, we can afford it. And we could still be up to our old tricks, using your depositor money to gamble with. Now, they said, no, and it's not about that. No. She understands us. She understands the banking industry. This is what the banking industry says. She understands us, and she understands how we really work. And she also doesn't vilify us like that Bernie Sanders or that Barack Obama. They hurt our feelings. They made us feel bad. They made us feel terrible. Remember, Barack Obama said Wall Street investors were a bunch of fat cat bankers. Oh, real tough there. These guys have like the thinnest skin in the world. Come on. And Bernie Sanders, in the recent debate, said the Wall Street business model was fraud. Strong words. Strong words. And they note that she's avoided vilifying the industry. Now, hey, look, let's be fair. It's not as if all of Wall Street loves her. No, of course not. Even those reforms, which won't actually do anything to prevent them from doing their old dirty tricks, and stop another crisis, which would lead to another bailout, well, even those modest regulations, which I'm in favor of, they're still too much for some of these guys. Donors working in the finance and insurance industry have actually given $22 million to Ted Cruz and $21 million to Jeb Bush's campaign and their affiliated super PACs. Now, that's roughly about 3 times as much as they've given to Hillary Clinton and the outside group supporting her. And this is according to information from CrowdPac, which is a nonpartisan political research company. And Anthony Scaramucci, who is a major Republican donor and founder of Skybridge Capital, when he says, people on Wall Street view Hillary Clinton with a level of caution that they didn't view President Clinton with. Why? Well, he says it's this. Quote, it's this progressive nonsense. Her rhetoric. That progressive nonsense. How dare you stop us from crashing the economy again like we did in 2008 and then profiting massively off of it? Now, how dare you? How dare you? Progressive nonsense. Look, man, Bill Clinton played the game. He was good to the bankers. But Hillary has all this. She's got to say all this progressive nonsense because of Bernie Sanders. Now, he says if we had it our way, we'd elect Ted Cruz or Jeb Bush, who, by the way, their policies will lower their taxes and deregulate the financial industry even more, as if they don't already have enough of our money. Now, this goes back to my early point. They're not giving Hillary Clinton money because she's going to be tough on Wall Street. They're giving her money because she's the weakest on Wall Street reform on the Democratic side. The bankers, they're playing both sides against the middle. They're giving all this money to candidates on both sides in order to do one thing, in order to make sure that whoever gets into office gives them access, influence, and return on investment. At the end of the day, that's how this game is played.